Welcome back to this another live session, traders. For the last week of we have finished up October last week and starting another first week of November, and looking at the NFP week, special week, and I believe you guys ready for this big trading week coming up. Past week we had an incredible trading sessions. I hope that the stream is on and you guys can see and hear. Can you write something in the live chat if you can hear? Welcome. Welcome. Very good. Now, starting with another trading week. Now, this week, absolutely important, as you know that we are starting a potentially big week of the month as NFP. Now, with this NFP week coming up, if you look at starting tonight, right, there will be news coming tonight in my zone. It could be in a zone different area. So with the dollar ISM manufacturing PMI on US dollar coming up, and that will also news for gold. And tomorrow, big day for AUD, which also dollar for news for gold, as with the AUD, a big day for AUD, and that will also create increased volatility on gold. Followed by Wednesday, chop opening, just tentative, followed by also later in NOI session ADP non-farm employment change. With all those news and schedule, let's analyze the market first of all from the bigger picture perspective. Looking at daily, are you going to start with, we have today watch list for British pound US dollar and gold, and these two instruments currently trending. So are you going to start Gbpusd first or gold first? What do you prefer? So what's your thought on this? Share your opinion. What most member will ask, we will be going with that. Okay, so let's see. Gold, okay. Ahmed wants gold. Anyone else different? Dragavin Delhi wants gold. Anyone has different opinion? Okay, gold, good day, welcome. Gold, DX. Okay, DX, basically with British pound US dollar, we will also be looking at DXY. That's just a mirror of DXY. British pound US dollar, you can find reflection of DXY. We'll be discussing in this live session. Okay, so we are going with gold because most members looking at gold. So, and then good morning, and then also you will be looking at British pound US dollar. British pound US dollar currently on a trend. So among all the USD pair, I have shortlisted today British pound US dollar. But if you are looking at any other currencies such as dollar yen or euro dollar, you can let me know in the live chat. We can have a look quickly. Gold, okay, yep, awesome. All right, so before I progress further, guys, make sure you like this stream. When you like it, YouTube algorithm likes it and it shows to more people, which is good for us to see that more members, more people are with us trading together in this live session. So did you like this stream? Awesome, thank you. And now let's begin with the gold analysis, and I'm looking at the daily chart here in this market. Now, daily time frame is significant. Why? Because it's neither a very higher time frame nor the lower time frame. We'll be also looking at the monthly and weekly time frame as well. First, beginning with the daily time frame to see that as first day of trading week, which is absolutely important day because it's Monday, first in the beginning of the day, right? We still have full London session plus NY session. Two biggest session is still remaining for the day, right? So that being said, we are looking at this on the daily chart on gold to see that where the market is heading. Now, looking at the gold price action here, this is the gold support level where the prices cross this daily low, and the market has crossed this daily low where the price overall, if we look at now, first of all, looking at the trend is very important because that's where you will find the directional bias in the market. Welcome. And because the market trend is here, is it a bull market or bear market from the daily? Sometimes confusing, right? It's in fact, if you look at that, it is a bull market or it is a bear market. And if you look at this market structure, you might find two directional answer. It could be the bull market. You might say, okay, it's a bull market. We see that there is a series of higher high, higher low, uptrend, and also you can consider as a bear market, a drop, pullback, drop, pullback. So it's in a downtrend. So in fact, is this a bull market or a bear market? Now the answer depends on what multiple time frame you are using to look at this market. So that's why to find a clear trend, that means to understand a market is in a bull or bear, always has to have two time frame, at least multiple time frame. Then you can get those understanding of the clear direction in the market. Multiple time frame is very important because one time frame will give you confusing trending direction, but when you combine with the higher time frame, combine with the lower time frame, that is where you can find the clear directional bias in the market. So that being said, if you look at this daily market, we will be looking at the lower time frame trend to consider along with the daily, right? So let's go back to the 1 hour chart that you can see. Now this is where, if you look at this 1 hour market structure, it is globally a downtrend here, right? Every session the market is maintaining this series of lower high, so it's a downtrend. Therefore, if you look at the daily chart, what kind of price action that we have seen so far is, once the market opened earlier with Asian session, the market has initially dropped that daily low here, and with this break of this daily low, we can see the market is breaking that daily low. As the market has broken that daily low where there is a high area of value, there is a rejection to the upside here, and as there is a red long doji here in that market on gold, the price has broken that daily low, has got that rejection back to the upside here. any break above can give us that selling opportunity here in that market, because it's currently still a bear market, though we see there is a bounce back to the upside from this daily support level. So going back to now 15-minute chart, here you can see there is a bullish trend continuation in this lower time frame. So there is a point of confusion of the higher time frame and the lower time frame, guys. This is the daily open with an order block on the 15 minutes. The market now locally in an uptrend. So if you look at the 15-minute perspective here, that you can see this market is approaching this key level of resistance. So some of the levels that you can look at, this is the recent high, and also there is another recent high here. Breaking any of this high can give a potential reversal. At the moment, in this lower time frame, that you can see the market is approaching back to the upside here in that market. So we are dropping down to the 5-minute chart to see how the market is evolving in that area. And you can see that lower time frame price action here. This is support. All right, so as the market is creating this series of higher low, and we see from the daily it is still in a downtrend. Therefore, at the moment we are looking to see potential reversal from the daily for another potential wave of drop in this market, as already there is a previous daily candle, a bear candle formation here in that market. Okay, so here in that area that you can see the market is in a downtrend, creating series of lower high. This is a key level of trend line that you can see, and expecting the market to break that trend line and then to potentially drop back down to daily support or continue to drop to certain level of the daily level here in that market. This is what we are looking in this market for, another wave of drop here in that area. Now, as the market here in that area showing that downtrend, there's a series of lower high. We are looking at the market to break that high as series of lower high, expecting the market to potentially break the trend line and then continue to drop back down here to this support level in that market here in this area. That is what we are looking at this price action with. This is an order block in that market, and that is an important order block here that you can see in this area. And with this order block, if the market breaks that low here, that means continue to trend backward again from this daily low, we could see that downtrend continuation in that market. And I'm going to the 1-minute chart to see that overall market trend. Some of the levels that we have drawn, 4036, if the market managed to go up well above this trend line, we might be able to find that potential selling opportunity here. As the price from the daily time frame already above this daily open, the market initially dropped that low. The possibility here for after bounce the market to return again back below to this daily support level. That is what we are looking here. So as we can see here is the uptrend in that area, expecting the market to trend back down here. 4,000 level is where we can sell the market if it enough goes back up to that level. This is the current support level that we can expect the market to drop back down here to this support level here in that market. Ready for an entry? Sir, gold rejecting the weekly FVG. So if you look at the weekly, okay, so here, yes, it is in fact, gold is rejecting this weekly. If you look at the weekly market now, that's why we discussed that in the beginning of the session, that looking at the multiple time frame, right? Looking at the multiple time frame is very important, as if you look at the weekly market, that you can see it's a clean bullish market structure. Every week there is a bullish impulsive candlestick pattern, a big bull candle, right, followed by another bull candle, followed by another bull candle. So there's no, in fact, red candlestick pattern formation in that area on gold that you can see. Therefore, it's a bull market. And 2 weeks that we can see, gold has initially dropped for a pullback. Now, last week, the candle close that you can see on the weekly on gold is a potentially bullish rejection from the weekly perspective. I'm talking about, guys, there's a very high chance of confusing with the very lower time frame and very higher time frame. Keep in mind that we saw that uptrend on 15 minutes, uptrend on 1 minute, but on weekly, if you look at, this is where weekly bullish market structure. And if you look at this weekly candle closed, what do you see? That there is a long wick here, okay, and also there is a healthy body on the weekly time frame with a long wick with a healthy body. And as there's gap open, if you look at the previous weekly market structure, what do you see? There is a gap open in that area, and there is a sharp rejection, which is fair value gap. Right? And because the market has a sharp rejection from this, if you look at 1, right, 2 weekly low here, right, and the market has got that rejection back to the upside, candle close with a long wick at the bottom. Now there is an important feature or the parameter of this previous weekly candle close here that you can see. It has, if you look at the top, there's a gap open, and also if you look at the bottom, it has a long wick rejection. That means imbalance is to the upside here, because there is a stronger bullish pressure, and also their gap has not been tested. The possibility here, the market to go ahead and hit that level is higher than dropping back down, because it's a historically bull market. So keeping it in mind, if we look at the lower time frame here, in this 1 hour chart that you can see, this 1 hour candlestick pattern formation, it is a bullish engulfer. in this area it's a bull market, so the possibility here for going up to 4036. So if you are trading on very lower time frame, here is the possibility for an upside, and this is the daily support. If the market reverse from after breaking of this high, we can look for selling. On the other hand, on the lower time frame, we can see there is a bullish price action in this lower time frame. This is the 1 hour price action. After this red candle, there is a 1 hour bullish engulfer previous hour has formed in that area, and with that bullish engulfer formation, the market is maintaining this uptrending market structure that you can see here in that market. So that being said, looking at the lower time frame again on the 1 minute chart, we can see that there is a trend continuation here in that market on the lower time frame, and the price is approaching this trend line, which is a key support level on the lower time frame. And with this support test on gold, that we are looking at this market for a possible bounce of that level. The previous swing high is at 4036, and lower time frame price action here, which is the day 1 hour support. If we look at some of the levels that it has created, now how the market is interacting to those levels are important. So this is one of the key levels. We need to look at the key levels. That means what are the levels the market is maintaining, and because the market is maintaining those levels, the key level here is, if you look at, these are some of the key levels, and if there is a bigger rejection, we in our previous Zoom classes, if you looked at, guys, we discussed about the ATR, right? If we see the market is hitting those key levels with a bigger ATR, we are on the trade, and that's what we are looking at. Bigger ATR candle or a longer move to the key level, and then entering into the trade from those key levels. That is what we are looking at, those market structure here. So looking for a possible rejection here. If you look at the lower time frame, you can see this is the 5-minute chart. There is an initial break below here in that area, and if we see the market has managed to break above this level, as there is a multiple liquidity sweep here, the possibility here for the market to bounce off this level is higher in that area. If the markets break this low here with a bigger candlestick pattern and reject from that level, we can look for short-term entry to the upside. Depending on how the market structure is forming is the key here to look at. So as the market on the support level, we are looking to see how the price action is creating the structure in that area. We have seen there is a multiple liquidity grab here, getting some kind of rejection on the lower time frame, which is forming possible bullish price action for short term here. If the market goes up to hit that high, we might be able to find a potential bullish entry opportunity here in that area, depending on how the market structure is forming. Of course, if you look at the 5 minutes here, that you can see it is also forming a dodgy price action in this area here. The market is little sideways, but we might be able to find an entry. As we can see, the price action is showing up to be potentially bullish here in that area. So with a 5 minutes bullish candlestick pattern formation here, if the market is going to hit that level here in that area, we are looking to enter any bullish trade opportunity in this area. Let's see that how the market structure is building the momentum. That's crossing back to the upside here in that market, and the price action is showing up to be possibly to remain upside in that zone, that we could see the price to bounce off that level and potentially to create a new higher high here in that market. And if we look at the lower time frame price action, that's so far showing up to be that bullish continuation back above here in that area. And let's wait to see how the market is closing this lower time frame price action. Here is the bullish price action so far here, that's showing up to be lower time frame upside in that area, as the market has got rejection from this daily low here. So breaking below here could give us a possible trend continuation, and if the market coming down to this for another retest, we might be able to find potential entry to the upside here. So this kind of, if you look at the 1 minute red candle, this kind of rejection is basically liquidity grab. More often you see that happens over and over again in the market. Morning coach, welcome back to this session. Yes, so we see the market is having the rejection from this weekly FVG. So but on the lower time frame, if we look at the daily market structure that you can see, where there is a daily support level that you can see, the price has created an upside bias on the daily time frame. From the 1 hour perspective as well, that you can see created a bullish price action pattern in that area. So if we look at the 5 minutes chart, where there is a bullish, there is a doji, and the market again coming for potentially liquidity sweep here in that zone, where from the 1 minute chart has dropped back to this support. Let's see how the market is reacting to this support. Depending on how the market structure is forming, we can look for entry if we see enough confirmation for this market to go up here in that area. So here multiple liquidity sweep, market again bouncing off that level for potentially another return back to the upside, or we could see the deeper pullback. Here is maintaining in this area the bullish market structure. We could see that break above if the price cross this high here, and that is where we would like to see the market is trending. Now, as the first day of trading week, it's very important that we remain fully in the flow. That means trading based on the trend. That's where the key here. And we are looking to enter based on the trend in the major direction of the trend. That's where the bigger trade will come in play when you trade with the trend. To trade bigger, always look at the direction of the trend. And because if you can identify the direction of the trend, if you can enter based on the trend, more often you will become winner with a bigger trade. And that's the secret of becoming consistently profitable trader, because you will never be able to win every trade that coming along the way. But if you are trading with the trend and letting your winner, that means the one that is working out, letting it for bigger profit target in the direction of the trend, you are always ahead in your trading. That's the secret, guys. That's the secret. Keep the winner running for bigger profit target. Trade with the trend and let the market do the job for you, because when you trade with the trend, when you let the winner running, you're gonna be winner all the time. You don't have to win all trade to be winner all the time. At the end of the week, look at your PNL. Look at your total PNL. That's where the secret. I've already shown you guys. I've already posted countless trade in the group. You guys have seen already. We had a great feedback from our members as well, right? And some of the trade that I have shared, bigger wins look like this. See this one here. This is based on our strategies. We had a big Zoom classes yesterday as well, discussing about this strategy in the premium group. Bigger win is the key, right? You need to win big to remain profitable over the long term. You don't have to win all the trade, and that is where you need to look at the bigger profit target. Now, bringing this on the front, how much big win you should be taking, right? Now, is it worth taking the bigger win and a smaller loss for multiple times? Right, so let's see those trades that open from my personal trading from my mobile phone. That is screenshot that I have shared. So you see that how many red candles, how many red trades that you can see, and see the overall results at the end of the week. That's where you need to look at. You see that? That's where you need to look at, not individual trade. That's true trading. It's impossible for you to lose over the long term. Look at the PNL here. At the end of the week, look at the PNL, right? That's what you need to look at. Doing the proper risk management and let the winner running to give you the best out of your trade. That's my strategy. Big win, smaller loss. Impossible to lose over the long term. Say impossible to lose in the live chat if you are resonating with me. That's what you need to do. Welcome. Okay, so here the market is slowly building that momentum back to the upside here in that area where there is a high area of value. The market is trying to break that high here. It is also showing up to be potentially bullish. Quite a few bullish price action formation here in that market where the price action is showing up to be upside here, creating series of higher high and higher low, which is in an uptrending market structure. Welcome. Hello. So here is multiple times the market grabbed liquidity. There was another break here and the market has managed to break again above to the upside, which is showing that potentially trend continuation here back to the upside in that market. And that's where you could see the price to continue to rise back here to create a new higher high. We are on this, waiting for potential breakout to the direction of the trend. Now looking at the multiple time frame here in that area with a doji. Now this doji here that you can see, it's getting some reaction back below in that area, where with a double top the price is coming back below here for a liquidity sweep. You might see that potential rejection back again to the upside here in that market. From the 1 hour perspective, where you can see the market slowly building that momentum back below. Now looking at this 15 minutes price action, which is potentially forming a doji. So if this 15 minutes candlestick pattern forming a doji here, we could see that potentially to reject back again. Here is a liquidity sweep that you can see again. We're going to see a new higher high. Let's look at that. Now we'll close the winner. Awesome. That's what the market is moving in the major direction of the trend. So you see there is a break up structure here. This is key level of resistance. Once the market managed to break up here, there's a multiple liquidity gap in that area. We could see that new higher high creation in that area on this market. So from the 1 hour that you can see, the price is closing. Let's delete all those levels that as the market has created a new structure. This is the 1 hour price action, and after the previous 1 hourly bullish engulfer, we can see there is another bullish engulfer formation here in that market that could lead that market back above to this resistance line here, that you can see the price potentially to approach that key level. With multiple doji formation here in the market, that you can see the price is showing up to be upside, and where the market is maintaining this uptrending structure here in that area. And with a multiple liquidity sweep, the price has grabbed liquidity and forming a kind of doji here. Now this doji could be two-way. It could break to the upside to create a new higher high, which is highly likely as the trend is up. So the ideal move should be back to the upside here. If the market breaks from that structure, we might see that coming back here. But the possibility here so far showing that to be upside in that market, as this is a long-term bullish price action here. Looking at the 1 hour chart, this is the 1 hour candle close with a bullish again. Now If this candlestick pattern breaking to the upside here, where there is a high area of value, we might see the market to trend back up here to create a new higher high. If this move fails to create a higher high, the price may drop here. So it's still directionally upside here in that area. Maintaining series of higher low, and that's a breakout. That's a strong breakout, and the market trying to come back further low here, depending on where it is trying to be heading. So breakout, now retest. We will be looking into the entry as soon as we see the market has significantly rejected on one direction. There's a volatility coming in the market. Still maintaining this uptrending market structure. You see there is a significant bullish reaction in this market, where the price may continue to rise back up further to this resistance line to 204026 level, which we could see the market to trend back up there to create a new higher high in that market. So there is a doji here in that area that you can see on the 1 minute chart, and the 5 minutes candle close with a big bullish price action with a potential bounce back to the upside, expecting the trend continuation here in this market, where there's one single move that you can see in that area that is potentially crossing that high. So with this breakup structure here now on gold, there's still possibility for a trend continuation, as the market has created an imbalance to the upside here in that market. Once the market will continue to trend back up, where the price to So there is a, if we look at the 5 minutes after this big bull candle, there is a long wick candlestick, and we can see the price testing the previous resistances support on the 5-minute chart, and so see that if the market is getting rejection or again bouncing off that level. Okay, so here we will be looking to potentially enter into position once you see the market as, if you look at, this is an order block, the price tested that level, and there is a possibility for an upside from this level here back above to the direction of the trend. So looking at this level, if you look at the 1 minute chart here, that you can see it's a bullish engulfer, and with this bullish engulfer on the 1 minute chart, which is showing up that there is a potential for bullish trend continuation. Now for us to go long, if you look at this is the resistance turn support here, and we'll be using a pending order above this level for any bounce from this level. If the market reject again back above, that we will be looking for entry from this level, keeping stop loss below this support level. It will be a buy stop order with a very tight stop loss, and the market reject from that level to this level high, which is not very big target, because we want to see the market is maintaining that uptrend here before we look for any entry back in that area. So as there is a rejection from this higher price on this lower time frame, if you look at that, the price is approaching that 1 hour support, and so we will be using buy stop in this area. If the market reverse to the upside, we will be looking for an entry from this support level. And so buy stop at 4018.79, stop loss placing below this level at 4015.80, and TV target setting above this high here to 4023.45. And this is a tight stop loss, and expecting if the market reject back again to the direction of the trend, only in that case we will be on the trade, as the market may still can break below, and if the market is not being able to break that high, will not be in this trade here. So looking at this level here, that you can see, if this market reverse from this level with this one leaving as a fake out, then we might see the market to drop back below here to the order block, depending on how the market structure is forming. Still possibility for a reversal. If it form reversal, then we'll see the market, if it is trending back down, we'll be looking for potentially downtrend continuation here in that market. There is a complete break from this high, and at the same time the price on a support level. Now, there are two possible scenarios as we discussed: this market to continue to drop, or again revert back again to the upside to continue to the direction of the major trend. So we see some upside coming up. If this market is rejecting back above, we will be entering at this level as a buy stop, and we'll be taking profit in that move back to the upside. If the market break below, we are not on the trade. So it's a buy stop pending order. We placed it, and let's see that how the market is doing here in that area. Now, some bearish price action that you can see in that area. So that might it might try to reverse in that area, but we are still, until the candle close and the market change its trend, still can be a fake out and could continue to rise back up. So some rejection here that's showing up, and we place the pending order well above here. If the market continues to rise back, we'll be on the trade for this potential move back to the upside here in that market. The key here is to wait for patiently for the market to show up its hand in that area. And welcome back to this live session. Good day. And in the meantime, traders, if you're enjoying the live session, make sure you like this stream and also subscribe to the channel. If you haven't done yet, press the notification bell so that you're not missing any of the content that I'm posting every day. A very long rejection from a very higher price with a big long doji formation here that you can see in this market. So that might create some a rejection again back above. So the market now could continue to rise to fill that imbalance, or you could see that a direct drop back here to this order block. Depending on how the market structure is forming will determine the next move in this market. So we say with a multiple doji formation here that you can see the market is slowly building up, and we place the pending order, guys, here. If the market goes up, we will be on the trade, and I will be anytime if the market goes enough move, and if I see that there is a possibility for us to close the trade also, I will be giving a shout out if we are closing with the running profit. So keep eye if you are on this trade with me. And so in the meantime, guys, make sure you like this stream and also subscribe to the channel. Here you can see there is a long wick doji formation on the lower time frame, and this is a pretty long wick doji, and the market may try to create some rejection from this price here, and we're still not on the trade. Now there is a possibility here, as we mentioned earlier, that the market to continue to rise back. If this market is breaking this support here, then potentially to start a downtrend. So it's reached that very key level. The market is trying to push that back up in that area. As the market left an imbalance here at 4023, there is a possibility for the price to go ahead and fill those imbalance for another retest, or we could see if this is forming a reversal and the price is going back up. That's why we place the TP target in that area, is because this is an imbalance in the market. Once the market managed to cross this high here, there is a possibility boom bounce back to the upside. So you are nearing to the entry point here in that market, and I'll give you a shout out as soon as we'll be able to take that trade entry. Okay, the trade is active now on gold, and the trade is active. The market is just penetrated that level, and expecting to bounce off that level to the upside here. If you look at the lower time frame, so you're on an active trade, it's very tight stop loss with fully risk managed system. Now the market, we're waiting for another bounce back to the upside, the imbalance to the upside here. Can see here the market to fill that zone to the upside. And okay, so we are running in some profit here. Boom, 20, 12, 13 pip up. Would like to see that going up further back to the upside. Awesome. Say yes in the live chat if you're running the trade. I'm running to 16, 15, 16 pip up. I'd like to see one more break to the upside, and going back up here in that area where there is a high area of value, and the market on a key level. So this is what we would like to see the market to break that high here, and then to fill that long wick going back up to that level. This is what we want to see, as currently it's on a lower time frame pullback. So entry now, entry level with a liquidity sweep on the 10 EMA retest here. This is showing up potentially to be bullish back to the upside. All right, so as again another red candle formation here in that area where there is a again here we could see an inverted head and shoulder. Want to see that it's breaking that high here, potentially to create a new higher high from this level, to bounce off the level, crossing that high, and the market left a bigger imbalance in that area here, in this zone here, that expecting the price to go ahead and fill those imbalance. Are you guys with me now? So here we are up 13, 14 pip, and welcome back to this live session. All right, so as it's still maintaining that uptrend, I'm still running the trade for potential another flight back to the upside for another new higher high. Now, if the market maintain this as an inverted head and shoulder and going up for a new higher high, we could see the price to bounce off that level, and that is what looking at this market structure here. So you can see the price is showing up, and getting for a pullback. Okay, so we see there is a 15-minute candle close, and that 15-minute candle close that you can see is a bullish engulfer crossing a key important support level. Now, if the market is going up to fill that zone here, which is we could see that potentially to go up and fill that area, then the next level that you are looking at to cross 4023 level, and that's what from the 1 minute chart that you can see the market is approaching that high where there is a high area of value, and that's what you can see the market is creating an uptrending market structure here that price is showing up to be bullish for long term in this area. So far in this zone here, the market is showing up bullish price action, and with a multiple liquidity sweep crossing that high, and wanna see creating a new higher high. It's on a consolidation at our entry point. That's where price action is now breaking that low, and okay, so there is a break of structure, and that is it's an unusual breakdown here in that area. So if this move fails to go up, we might see potential even change of trend. So let's see that where the market is heading back again. Still on this trade here. There is a low volume in the market due to a fundamental reason. There is a comparatively low volume that you can see, and not moving any stop loss here. Let's see where the market is trying to be heading back. We are out with this trade, and it has failed to create a higher high from this resistance line, and at any point we can re-enter. It's a very tight stop loss, 29p. If the market in fact want to show a bullish trend here, it's not going for a bigger move. You can re-enter from that level again. Let's see that how this candle is being closed. It's only 29p here. Trade is still on. Okay, so here there is a narrow doji, and the market again just from that level is bouncing off that area. Now this is very interesting. The price has dropped to that, exactly to that neckline, and getting rejection back again. So the possibility here for a new higher high. Yeah, enter again. So the market is from that level. It's moving back. I'll be a little bit patient here to see that where the market. It is still it is still can continue to rise back to the upside. If you look at that, was very tight move that you can see. Okay, so it's moving almost in the same. This is a big drop. The market does this more often. It was basically a stronger liquidity grab, and that is basically propelling that price back above again. This is a pure imbalance in the market where the price may here, because here you can see multiple times it rejected from this level. We could see now a potentially new higher high creation in that market here, back to the upside. So the market structure from the 30 minutes as well, showing up to be bullish in that area that you can see, and still maintaining that upside. So there is a possibility for a breakout here to create a new higher high as the imbalance here in that market in this direction. So looking at the 5-minute chart, that you can see it is a bullish market structure, and we could see the price to continue to trend back here and potentially to create a new higher high. As there was a break of structure, it couldn't create a new lower low. Instead, it has created an uptrending market structure here to potentially to create a new higher high. So therefore, upside bias is higher here in that market, and we could see the price to continue to trend back up to the upside here to create potentially new high. So the market structure here showing up to be significantly bullish, and we are looking for that next potential entry in that area. So we see this is a series of higher low formation, and we could see the price to break that high, and as it's now on the top, so we are not going to buy from the top, rather we'll be waiting for another break of structure here in this market, and that's where the key entry that coming in play. So if we look at the hourly price action, this is the 1 hour market structure. So far, after the previous 1 hour price action, the market has shown that this market potentially to be bullish, and we might see that further trend continuation back here to the upside. That lower time frame price action showing up to be that after this structure also it's pushing back up, and we might see now a new higher high. With a bullish engulfer here on 15 minutes candle close, that you can see before the 1 hour candle there's one more candle, and that is showing that the price, if we look at back to back to 15 minutes bullish engulfer with a cross of 10 and 20 EMA, that is showing the price to potentially to create a new higher high, and struggling to bounce off this level in that area. We're creating a new structure here, so you could be able to use pending or above this high for another bullish bounce back to the upside. There's only one thing that you need to be aware of is the current intraday candle close, and so before the candle close on the lower time frame, we can see there is a 5 minutes liquidity gap here, crossed that previous candle's low. If you look at the previous candle's low is crossed, and the market has got again another rejection back above here with a 1 minute bullish engulfer that currently you can see the price has formed. And the way the market structure is forming, that is showing up to be potentially continue to trend back here, and we are looking to 10 minutes later a candle close on the 1 hour, so which is breakout coming in that area, and that might be potentially to go up and creating a new higher high. Stronger breakout, and Okay, so finally the market has in fact broken above here. Okay, so it managed to break to the upside with a one single move in that market. So looking at from that perspective, it is currently in a bull market, and as we begin the session with the fact that from the daily the price has got rejection from this daily support level here, and with that rejection from the daily, there is a daily bullish impulse back to the upside, and we could see that now the market to continue to rise back here to this high to create a new higher high in that market. So as we are progressing with the session for the NY, we are looking at again another pullback and then entry. From the 1 hour perspective, that you can see there's a bullish engulfer followed by narrower candle. Now we see the market has created another bullish impulse move back to the upside, guys, here. So that being said, for us again for another entry, as the market established now in this lower time frame a bullish trend, and for us to enter we want to see 1 minute breakup structure, which is potentially to drop back below here and then to continue to trend. This is what we are looking at this market for another entry. Any breakup structure can give us potential entry in this market, and just we have started the week. It's patience all about, guys. It's all about patience, so don't lose patience. We still have the full NY session and London session to trade the market. All right, keep your fund always safe on your trading account. Take a smaller risk, bigger profit target. That's the key to become a consistently profitable trader. You guys can see already we are trading in this strategy every single day, making consistent growth in the academy. If you are excited about learning more about the strategy, you can join by visiting the website. You can find link below this video. Visit www.forextradingwizard.com for more updated education as well as joining opportunity. Currently few spots available in the mentorship where you can learn and access every trade that I'm opening in real time, and also be part of the trading community. That being said, I'll see you again very soon in next live in just a matter of 3 hours to trade. Coming up, a very important high impact news. You look at ISM manufacturing PMI, another market mover. Looking forward to it to see there, guys. And until that, stay well, stay happy. We'll see you there again trading.